as promised, part 2. So we have Josh Maynard here from More Mortgage Options. Fantastic to have you here, mate. And I suppose what we wanted to try and do is bring a little bit of different flavour to this. Obviously, we give a lot of real estate sort of stuff, and we've been working really closely together now for a while. Obviously know each other as well through playing football together. I'm much older than Josh, so he was just coming through when I was finishing up, but a star nonetheless at the Ainsley Footy Club. Mate, let's just dive straight into it. So obviously one of the questions we get as real estate agents all the time is, how's the market? People want to kind of get an idea of what's going on, but that's very specifically just the real estate market. What's happening in your world, and tell us a little bit about what's happening there.
Yeah, excellent. So I guess in the last 12 to 24 months, it's been a bit of a whirlwind with rates. So it's seen predominantly been refinances. Obviously, there's been a lot of people coming off the fixed rates that started with a 1 and a 2. And hitting a bit of a cliff there to now starting often with a 6 and more recently with a 5, which has been good. So identifying that there's been a bit of hurt to soften the blow and improve cash flow, we sort of can explore the market and see what's there. But in the last sort of 4 or 5 months, consumer confidence seems to be back with all the chatter of the fixed, so the variable rate, when it just drops there in February.
Yes.
And it's a return of the buyer, I believe. The amount of pre-approval inquiries has been really, really positive.
And that probably does flow on into the real estate sort of thing, side of things. Sorry. I know we do look at average bidders per auction in our side of the business, and that sort of increased about 25% from 1.5 to 2 bidders per auction. So it does sort of have this great flow on where you probably get an earlier read than we do of how the market's actually going. But to be able to see that flow through is really interesting to me. I suppose one of the big questions that comes up all the time, especially when we're selling a lot of stuff on the extremities of Canberra, which are sort of first home buyer centric. What are some of the things that, I guess a first home buyer needs to think about when they're looking at purchasing a first place, but also what other incentives are there at the moment for them?
Yeah, cool. So I guess I'll start with the incentive part. So straight away, stamp duty concessions in the ACT and sort of surrounding regions in New South Wales as well. So avoidance of having to pay stamp duty on your first property, which is obviously an additional cost that when first home buyers often don't have the funds to pay for that.
Yep. And what price is that that's a capped price?
Yeah, so in the ACT it's up to $1 million.
Yep.
And then after that it's a concessional discount there. Often many first home buyers aren't actually paying for the around the $1 million mark, but it's always nice that it's there.
Yep.
And secondary to that, and one we're doing a lot of, is the first home guarantee scheme. Now that's probably one that's sort of been heard about the most, but effectively what you can do is contribute as little as a 5% deposit and avoid paying lenders' mortgage insurance. There's a few income caps and a few sort of price caps on property. So $750,000 for the purchase price. An individual can't have earned over $125,000 the previous financial year, and for a couple $200,000.
Yep.
So that's a really fantastic scheme when the shoe fits. And one that's not really spoken about a lot as well is the lenders provide sort of cashback offers in some cases for first home buyers. So that can be a really, really good incentive in some cases.
Yeah, that's so handy. And I think it's really good just for, I guess, for everyone to sort of know what's available out there. It's really funny. You see some people that come to our open homes and, that we're capped at 750, and some of the newer agents actually don't understand why they keep saying this. These buyers keep saying this, and I think it's a tough one if your house is worth around 770 because you have a bunch of people that are keen at a level, but they can't really go over because they want to have that deposit guarantee. I suppose the next thing I wanted to ask about, obviously there's a few things that really need to line up in terms of buying a place and getting that process right. What are sort of the common mistakes that you sort of see people either skipping or I guess, if they've got a mortgage, they just leave it and sit there and they wonder why they're just getting rolled, with their repayments and whatnot. Yeah. What are some of the common mistakes that you sort of alleviate, I guess, in your job? Yeah,
absolutely. So that first point on existing mortgage holders, identifying that, you might have got a good interest rate at the start of the loan, but it's ensuring that you're sort of constantly reaching out to your broker or making sort of a look into it yourself to make sure you're not paying too much. Yep. That's one thing. For new time buyers, it's understanding, what your budget is, what you're really comfortable in spending, and speaking with the broker and understanding, right, so I can get this amount of money from the bank, but do I feel comfortable meeting those repayments and sort of forecasting what some other projected costs may be as well. So that's a big one.
Yeah, I think that's probably one thing that we see sometimes is that people not actually understanding how many other things they've got to pay for. I guess doing it. Also the type of loan. I think that's one thing that gets a little bit confused. You kind of say, "Oh, I'm getting a mortgage or I'm getting a home loan," but the actual type, some you can't pay off early, some that have no flexibility. Is that something that you see that sort of trips people up as well?
Yeah, massively. So every time I meet with a new client, I like to ask, what's your sort of 5 to 10 year goal with that property or yourselves in sort of employment or what that may be, and can make a young couple pretty uncomfortable. But there's good reason for it. Now that's identifying financial structures for when you purchase a property is really important. It's not one size fits all. It's saying, right, well, if this may become an investment property in the future, well, I'm going to fund that and sort of suggest a different loan structure to ensure it's been a benefit in the future. What else you just said as well, Paine, I can't pay off the loan early. Again, you need to identify what your goals are, sort of short, medium, long term, and put the loan structures in place for that. I suppose there's so many nuances to a job, and it's probably, again, similar to real estate where you go, you just, we put a sign at the front, open the door, and people come and buy it. And it seems very easy on the outside where you go, I'll show you my pay slips, you tell me how much I can borrow, and then that's it. But there's so much more detail in it. Yeah, absolutely. So I guess there's a couple of things like that can really hurt you in terms of your borrowing capacity and when looking to apply for a loan. And namely, first one will be your employment. What type of employment you are is really important because the banks will actually look at that in different ways. Self-employed applicants, often banks will want sort of 2 years of your ABN being registered, and looking at sort of the average of that, or some will require the single year financials. Now, if you're a PAYG employee and decide you want to open your own business, well, maybe you hold out until you've bought that property. That's something you can discuss with the broker to say, is now a good time to buy, or should I hold off until a couple of years down the track? And secondary to that as well, it's your liabilities is a big killer in terms of your borrowing capacity. Now, for example, a 10K credit card, even if you've got a zero balance, well, that hinders your borrowing capacity by about $40,000 to $50,000. So, again, getting in the know, knowing your budget is really important before taking out any sort of external liabilities.
And I think one of those things too, like in terms of getting ready to buy a property, the lead-in time, I guess, to be able to have this strategic discussion. I think, if you make good money and you're relatively, I guess, sensible with what you're trying to buy, that shouldn't be too many issues. But things like that, things like little car loans, personal loans, I know they make a really big difference. So I guess from your point of view, if someone was going to buy a house, how long a lead-in time do you think is a necessary one if you've got a few of those little bits and pieces that, complicate things for you?
Yeah, absolutely. I guess sort of touching base and saying, I may not be in a position right now. Can you provide some sort of numbers where things are at? I can identify, what you can do right at this current moment and give you some calculations to work off. So you can say, right, I need to have a savings target of X by this date if I want to be able to purchase a property. Now, obviously, the market's forever moving in terms of your borrowing capacity because interest rates and such. So obviously, what I say today might not be what your borrowing capacity is in 12 months, but sort of it never really hurts to understand what you can do now. So, sort of 6 months out, 12 months out, whatever it may be. Happy to have a chat in the first instance.
Nice. And I know you're a very active member of the More team. Golden question, and this is what we always ask people that have to do with banking and this side of things. What are the rates going to do this year, do you think? What's the Reserve Bank going to do? And what do you think the banks will actually pass on and try and incentivise and sort of kick along the market?
Yeah. So, look, it's a question that's asked by most clients, and for good reason. We all would love to see a rate decrease on our mortgages. So my suggestion, and what many economists are saying and sort of the major banks, is there's likely to be sort of 2 to 3 more throughout 2025. I know the RBA is meeting sort of early April. Whether they hand down another rate decrease, time will tell. So that's an answer without giving you an exact answer. So that's, hopefully it's sort of 2 to 3 more for the remainder of the year, but time will tell.
Yeah, for sure. And I suppose that there's so many other factors at play with this sort of stuff, but it's really interesting. Hey, Joshy, thanks so much for your time, mate. Really appreciate it. It's always good to get another professional in that can tell us exactly what's going on in that space. And I suppose if you want to give yourself a little bit of a plug, I know you've been with the business for a while now. How do people get in contact with you?
Yeah, excellent. So you can touch base on the More Mortgage Options website. Otherwise, just on Instagram, Josh Maynard _mortgage broker as well. Happy to help there.
That's awesome. Thanks so much, mate. Really appreciate you coming along. Awesome to be able to have him here today. I hope you've enjoyed that episode. Thanks so much, guys, and we'll see you again next week.